And now it's time for Development Debates, where we delve into some of the questions shaping the future and present of China. Today we will see experts debate if it is wise to delay the rollout of a fully convertible yuan. Reuters reports that the Chinese government will delay the full convertibility of the yuan until the year 2020. Whereas currently government approval is required to convert renminbi to other currencies for overseas investments. The rumors claim that the government worries that corrupt officials will transfer their property immediately after, although their real concern may be losing control in the capital, or even worse, causing financial chaos and in turn affecting economic development. A Sina.com columnist, Xiao Lei, recently shared his opinion. He thinks that delay of a fully convertible yuan will cause great damage. He first explains how a non-convertible yuan has already done damage. Some Chinese companies operate internationally. One huge advantage is being able to convert renminbi to international currencies to invest. Already the government faces a lot of arbitrage-driven capital flows because of this. Currently, many Chinese companies use price differences abroad to make profits. Some companies even began setting up fake companies abroad to help convert the yuan. As a result, the government has limited preferential policies previously applied to export and import companies. This in turn has negatively affected businesses that were and are doing business legally. But with a fully convertible yuan, the onshore and offshore interest rate and exchange rate disparities would become more apparent. This would also hasten deregulation. It would also promote cheaper funding for domestic businesses, an advantage many offshore-based companies already enjoy. Xiao also says that the delay of fully convertible yuan will impede Shanghai from becoming an international financial hub. In Shanghai, there is still no international stock exchange, allowing people to buy stock from international companies. Furthermore, China's stock market is not really open to international investors either. Some think Shanghai is not a real international financial hub because of the regulation of capital and money market regulations. The RMB assets are unable to enter the international trade market, so Shanghai does not have the capital market to attract international investment. Xiao mentions that because China does not have pricing power, they have no say in the negotiations of pricing in the commodities market. If China cannot form a real international commodities market, China's demand is difficult to convert into price negotiations. China can lose profits in all kinds of markets. This directly affects the competitiveness of China's manufacturing industry in the future. Of course, to strive for international pricing power, China must have an international market. To build a really attractive international trading market, marketization of exchange rates and relaxing of capital controls are imperative. Finally, Xiao says that the delay of a fully convertible yuan means a high cost from losing time. While most industries in China can compete with the international market, the currency exchange rate reform has not kept up. At present, China's total import and export trade reached 50% of the GDP, and the demand from the international market for the yuan to be freely convertible is based on trade. So if and when the economy slows down to a certain extent, the aging society grows, or the government debt soars, it will be too late to start reforms for the exchange rate and capital market. Commentator Liu Xiaobo disagrees. He believes it is a good idea to delay the fully convertible yuan. The price of renminbi-dominated assets is currently very high. The price of a house is 2 to 3 times more than that in New York. If China comes to realize a fully convertible yuan, Chinese stocks will plunge and large amounts of capital outflows will be lost. Then the renminbi will depreciate. Also, the property market and the stock market could fall. Import prices, conversely, will rise, while energy, food, and other commodity prices will also rise. Obviously, inflation will occur, and this will hurt the Chinese industry and potentially cause severe unemployment. Overall, the international community and many Chinese citizens agree the renminbi should be convertible. The government's main goals are and will be expanding the renminbi's role in foreign investment, developing renminbi centers in foreign countries, and encouraging companies to use the renminbi in investments. Now we must all just wait and see when exactly this development occurs.